Welcome to First Time Moms, the podcast. I'm your host, Brooklyn, and today I'm joined by my mother-in-law, Miss Nancy.
Hi.
Welcome to the show.
Glad
It's
to
your
be
first
here.
time on the show now. Usually I have moms introduce their kids and their ages, so if you could.
Yes, well, that won't take long. I just have one son, Evan Gresham Jones, who happens to be married to you.
Yay, good for him. And how old is Evan?
Evan is 32.
Okay, so you're one of my seasoned moms.
Yes.
Yes,
I am.
yes,
I waited
yes.
quite a while to have him.
Ain't nothing wrong with that.
No, it wasn't, because
Yeah.
that was a choice.
Most of my moms that come on that are I either do interviews with or the co-hosts, they have younger children.
Okay.
So it's good to have moms who are vets in the game who can speak, and we actually have to believe what you guys say because you have the experience.
Yes.
Now I wanted to go ahead. Sorry about that.
With age comes wisdom.
That's true. I hear that a lot.
hmm
Now I wanted to have you on to talk about money.
Okay.
Because I think hearing a lot that Evan, like a lot of stories that he told me over the years, had me like, hold on, wait. So your mama know what to do with money. Like, and on the outside looking in, we thought y'all were rich because of the house that y'all lived in, the cars that y'all drove. We were like, oh, these some rich folks. And then when we found out that y'all like follow politics and stuff and invest in stocks, it was like, oh no, they rich for real. So I just like to think that you are in tune with financial literacy, if you will. So I wanted to have you on to kind of talk to our moms about what's some things that work for you and what's some things that they can do to teach their kids to be financially intuitive as well.
Okay.
Yeah. So first thing, I remember Evan said after birthday parties, whatever money he had in the cards, he didn't get himself.
Mm-hmm.
And that he remembered you saved all of his birthday cards money and put it in a checking account. And on his 18th birthday was like, here's all your money.
Yes. Yes. I did that. Frankly, I wish I had done it earlier. I started, I think, maybe when he was a preteen or something like that. Because as you save money, it becomes addictive. When you can look at an account and see it growing and see the money growing, it really gets you excited. So I began to show him how the money was growing. And he knew that there was an end date when he could get it. But just seeing money build like that can be quite exciting. So that's basically how, and we were not rich by any means.
Okay.
Perhaps from the outside looking in, it looked that way, but no one handed us anything.
Okay.
We did not have parents who were wealthy. So everything we got, it came from using skills to build and to save and to invest. So I learned that pretty early on. The key was being able to manage money.
Yeah.
That was the key.
Yeah.
So I don't know if you have.
And when you say manage money, what does that mean?
That means that I became aware of the importance of your credit
Yeah.
early on. Okay, right after college. In fact, I know credit card companies were sending notices
Mm-hmm.
asking applications to college students.
Mm-hmm.
And so many people who are in college don't have money. And so that became very tempting.
Mm-hmm.
And I did not do that. But after college, I realized when I wanted things, I had to use credit
Mm-hmm.
in order to get them. And so you learn early, how to budget. Because if you have a salary and you know how much you're going to get every 2 weeks, well, if you have bills that are more than that,
Mm-hmm.
then something is wrong. You're doing something wrong because you have to be willing to sacrifice and be able to pay those bills in order to build that credit. And you find that the more you do that, the more credit you get.
Right.
They come for you, but you got to manage it still.
Right.
Because they will offer you all kinds of credit once it's good, once your credit score is good. But you have to be able to know that you got to pay it back.
Right.
You have to have the ability to do that. And so budgeting becomes critical. And that is looking at what your expenses are versus what you have coming in to pay out.
Yeah.
So many people don't go through that process. It can be painful because so many times we get things because we want them.
Mm-hmm.
And we end up having all of these things. We're consumers, in other words. There's nothing else you get out of my message. You cannot always be a consumer because that's not the way to build wealth.
Yeah.
And being a consumer is going out buying all these material things that you think make you feel good.
Yep.
But in the end, it doesn't bring you any value.
Yep.
Because you can't sell them. And they don't grow in value.
Yep.
So, but it takes a while to learn that, especially if you've grown up with no money and you finally get this job out of college that you've been dreaming of, or where you could make some money, but you find out that if you don't carefully watch what you're spending, it's not, you could have this college education, make a lot of money. Well, if you're spending all the money, what is it really doing?
Right. You preaching to the choir.
Yeah.
You are definitely preaching to the choir. It's funny because when it comes to money, our relationship kind of mirrors your first relationship, which is sad to say, but I'm honest about it. And that was another reason why I wanted to have you on, because I'm like, there has to be accountability at some point. And I like what you said. I just finished a book by Oprah, and she said the moment that you don't feel the need to consume or acquire, that's when you're really free.
Yeah.
And when I say that one, like, pierced my soul a little bit, because I'm always thinking about what I could buy, what I could do. Even the studio, I was like, oh, I'm going to go buy this and I'm going to buy that. And I'm like, do I really need that? Are they looking at that? Is anybody really paying attention to that stuff? No, not at all. And yesterday I went to get my car serviced. I have an Infiniti. I went to get the car serviced, and my warranty is up for repairs and things like that. So the guy comes and was like, oh, well, now you're going to need all of these things done. And I'm thinking to myself, and I said out loud, I was just like, I feel a kind of way because I never had any issues with the vehicle as long as it was under warranty. As soon as the warranty is up, now you come to me with this list. I don't feel that it's a coincidence. I feel bamboozled.
Yeah.
And I just kind of sat there. So I went to one of the salesmen, like the manager of sales there. And I was just like, hey, what do I need to do to get out of this car? It's expensive. It's premium gas. I was way in over my head when I purchased it. I had a lump sum of money at the time. So I was thinking, oh, well, I can afford it. And that was before baby number 2. So I had a little extra money at the time too. But anyways, long story short, he was just like, hey, you owe more on this car than what it's worth. And I was like,
that happens very quickly with cars. Happens very quickly.
And so I want to say that probably was like my biggest financial wake up call. Because yesterday sitting in that dealership, I don't think I ever felt like that about money. Like I'm steadily paying for something. And as I'm paying for it, the value is steadily going down. So the goal is going to have to be to hurry up and pay this thing off as quick as possible. Yeah. If I want to get something else, while at the same time too, I need to save up for the next car and put that money in some sort of savings account where interest can help me pay for it rather than using credit and I'm paying them interest. Yes. Because I always do things. My money, my relationship with money is negative. I'm more of a use the credit. Let that interest rate build and all of that instead of save. And it was funny because during COVID, when the world was closed, and especially in New Jersey, you couldn't go anywhere. I remember saving $1,000 every paycheck. I remember saving $10,000 cash, and I felt so good. For the first time in
It's a
my
good
life, I
feeling.
saved some money, no debt anywhere. I was good. And then I found myself back in the dance with
Yeah.
debt.
Yeah. It's important. The younger you are, the better it is to start saving, even if it's just a little bit. But even to get started, you have to know exactly where your money is going. Okay, so from the smallest thing to a coffee every day, um, to going places that perhaps you could save some money and not go to, or go somewhere else that might be cheaper. Um, you have to know exactly where every dime is going, and that means tracking it. And a lot of people don't want to do that.
Right.
They don't want to track every dime they spend because they'll be surprised how much they're wasting. Money that could be saved. So that's a hard exercise, but the easier and the other thing is it's an exercise, but everything you do, writing it down makes such a difference. I remember when I was out of college, and I was trying to figure out what I was going to do with my life. I had a master's in social work. Um, and so I went 3 years as a student, but I was able to manage in New York City. Um, I lived in a studio or whatever. I call myself blessed because I was able to find a place I could afford in New York
Okay.
City. But when I started my full-time job, and that was with United Way, um, I realized, I said, "Oh, I got money now. I got money now." Well, not if you're spending it in the wrong ways. And I learned early on that I needed to be very conscious of what I was spending, um, because I remember, getting this paycheck, but I saw everything going out. I believe in paying bills, and the key was like paying them off. Um, but I learned not only in terms of dealing with money, but in life. You learn to, or some wise mentors, I call them, told me that I needed to really think about my life in terms of long term and short term. A lot of people don't want to think about long term, especially when you're young.
Yeah.
You don't want to think about it. But they were like, these were older gentlemen, as a matter of fact. Um, they really said to me, think about 10 years, even if you can't think longer than that. Think about 10 years. And for most people, you can see 10 years maybe, um, but you can't see further than that in a lot of cases. So at least for 10 years, think about where you want to be in 10 years. What would you like your life to be like in 10 years? Write it down. Write it down. And then think about, if you want this to happen in 10 years, what has to happen at 5 years in order to make that happen?
Yeah.
And then break it down for, okay, what do you need to do every year to make it to that 5 and then to the 10? So that way you're breaking down the kinds of things you need to do, or at least start immediately.
Yeah.
Because you learn as you get older that time is going to pass. Whether you doing something or not, time is going to pass. It will pass you by.
Yep.
If you don't start doing something.
Yep.
And that is so important. You start,
Yep.
And then I always found pleasure in measuring what I've done, to have an annual checkup to see, okay, did this happen? Did I do this? If not, let's get on course to
Yeah.
make it happen the next year. So, and that really sort of helps you with your life, projecting where you want to be, and what you need to do to get there. And the writing it down.
Yeah. Yeah.
It really,
Yeah.
it makes it more real.
Yeah, it brings it to life. Yeah.
Yeah, brings
Yeah.
it to life.
Yeah.
Exactly.
Now I know you talked about working at United Way, but you've also worked with some money companies too.
Yeah.
What experience do you have? Because I think sometimes it helps to let the people know that you know what you're talking about.
Yeah. So as I said, actually, my background was not in financial services at all. It was in education and social work. But I kept my eyes and ears open for opportunities. I've never said, okay, I want to be in this position. I want to be that way, doing that at a certain time. But I always kept my eyes open for opportunities that might come my way. And while I was at United Way, I worked for, I managed a committee. United Way is a quasi corporate organization, which means that the corporate heads are on the board and committees.
Okay.
And the committee that I staffed was headed by a president of a bank.
Okay.
And I worked with him 3 years. I had to prepare all of the information. We funded proposals for nonprofits.
Okay.
And so he had to chair every meeting, so I had to work with him. I prepared the work, but I had to brief him on who was coming forward and why we felt these were good proposals.
Okay.
So I decided that part of the training at United Way and as a social worker was to become an executive director of a nonprofit agency. There's the students, grad students who came along with me. Most of them were going to become executive directors of nonprofit agencies. United Way was sort of a training ground, but I decided that that's not quite what I wanted to do, and I wanted to explore the corporate world.
Okay.
So, and I was going to become, so as I'm feeling like I was not portraying my field or social work, I decided I was going to become a social worker in the bank.
Okay.
Okay. So I asked him about opportunities, and because we had the kind of relationship we had, he said, "Sure, Nancy, you want a real job now?" I was like, "Yeah, let's do it." So he sent me to different executives in the bank to talk to. It was like going on, I guess they call it like a fishing expedition, and they were really seeing who I was and how I fared. And one of the things I remember about that was that I had a resume myself in my hand, but each person I talked to already had a resume, my resume, and there was writing on it, the paper.
Oh, okay.
So people were making comments on this paper that I never saw. But I thought that was interesting. I was like, oh, they're all sizing me up, So, and what they're doing was finding a spot for me in the bank.
Okay.
Because of his referral. And so that really taught me I always knew the importance of cultivating relationships. But that really taught me that this is really how you succeed.
Yeah.
Knowing how to deal with all kinds. He was a Jewish guy.
Okay.
And in fact, while I was at United Way, there was another Jewish guy who was, one was my boss and one was the executive director. But the one that was my boss taught me about finances. Okay. Because I was going to, I think I was trying to get a co-op or something. At first he taught me about, along that time, I think for nonprofits, I think they're 403Bs. They're 401Ks, I think, in corporations, what they're called, these deferred accounts. And they were new to people. And so I was like, I can't save anything. I don't have enough money to save, these tax deferred accounts. Mm-hmm. And he said, Nancy, just try it. Just try it. He said, you'll see that because you do it, it'll reduce the amount of income that you have to pay taxes on. I was like, oh, okay. He said, just try it at the minimum level. Or at the very least, try it at the level at which the company is going to match. Because they were matching these funds.
Yeah, I need to see if my company does that.
Yes, you do. That is critical. That is absolutely critical.
Yeah.
For everybody, anybody, if your company has a plan where they are saving, going to give you a percentage of because these are your retirement money. This is
right.
There used to be that companies had pension funds that they would give you when you retire. You all don't have them.
Yeah, I
They,
know.
well, they started under us. That's why they did these tax deferred accounts, because you were part of saving for your own retirement. That's what that was about. But and I did it, and I was like, oh, I don't even miss this money. And then I increased it when it came around again. I was like, and I saw the money building again. I was like, I like this. And it gives you a sense of security, something to
Yeah.
fall back on
Yeah.
for hard time. But the key is letting the money stay there.
Yeah.
A lot of people get the money out. I mean, they have emergencies sometimes, but
Now, what's the name of this account again?
it's the same as a 401k,
Okay.
but it's in a nonprofit.
Okay. Okay.
Yeah, they're
Okay.
in different. In a nonprofit, it's called. I believe it's a 403b in a nonprofit.
Okay.
Or with the government, it's a TSP.
Okay.
Thrift Savings Plan.
Okay. Okay.
Actually, some governments also have 401ks because I had both without the OCC. But anyway, going back to the bank, that's where it started, in the bank, being the social worker. And I was helping the bank do their investments in low and moderate income communities. That's what the job was. And to report that information to the regulators,
Okay.
the bank regulators. So that's how it started in the financial service industry. But then and it was called CRA, Community Reinvestment Act. It's something for everybody really should know something about, because it's a bank's responsibility, what they have to do in the communities in which they serve.
Okay. And is this only for businesses or nonprofit businesses, or is this for any random person?
It's primarily for banks. It's for banks.
Okay.
Because banks are the ones that provide loans. The key to the regulation is that it's really to provide credit services in low and moderate income areas, to try to negate all of the disinvestment or redlining that was taking place in those communities.
Okay.
Yeah, that's
okay.
why the banks have this responsibility.
Well, more so when you say responsibility, what exactly are they doing for the people in the community?
It is quite it's a technical regulation. Well, it can be technical because it has to do with what kinds of loans are they providing. But of course, people have to be credit worthy.
Okay.
So it's not grants.
So credit is key.
Credit, again, going back to credit. Small businesses, are they providing lending? It focuses on mortgages for consumers, small business loans, investments in communities. So the bank is expected to provide a certain level of investment services. Loans, investments, and services are the three categories.
Okay.
Although they're changing the law right now, so I'm not sure where they are with that. It's been revised.
Okay.
Recently.
Okay. So that would be good for the people to Google and look into.
Yes.
Yeah.
Yes, Community Reinvestment Act, CRA. And I say that because I came back to CRA after when I left the bank. Actually, that's when I had Evan. When I left the bank and I moved to Georgia. That was in New York.
I thought you only did the bank this most recent time when you retired. I didn't know you did the bank before.
Yeah.
Oh.
That's where it
okay.
started. Yeah.
And then IRS and Freddie Mac.
Then, I've been to so many places. What I did, okay,
Sound like a millennial.
except that I was very strategic about my moves.
Okay.
Because I always stayed long enough to be vested in their retirement plan.
Okay.
So in those 401ks, and I always, and 5 years was you needed to be at least 5 years. And then you could get a certain amount of money for your pension, or you could take that with you, or put it in another, roll it over in another, or you could leave it there.
Okay.
Yeah. So I did that in a few cases, left it there. But when I left, I came to Georgia, and I came to work for President Jimmy Carter. I wanted to, and I went back to my nonprofit background.
Okay.
That's what I did when I came to Georgia, because I wanted the opportunity to work with him. And that was really about community empowerment programs. So the Atlanta Project was this program And what it did was to try to help people help themselves. They carved out an area in Atlanta, DeKalb, Clayton, and parts of Fulton County, where the poverty was the highest.
Okay.
They came up 500,000 people,
Mm.
and they built this circle and divided that area into 20 communities. And from each of those communities, they hired community organizers who would organize each particular community to see what they actually wanted for themselves. And they would come up with plans that they wanted to implement. And at downtown, I was in the collaboration center, the resource center, where we had groups of experts to focus on certain areas that the community was working on. They worked on housing, economic development, education, public safety, health, and there was one of the 6 areas. I can't think of the last one. And so each of the communities were to come up with what they wanted to do in each of those areas.
Mm.
And that we were there to help them implement those plans.
Now, was this a job or was this
It
contracted
was a
work?
job.
Okay, okay.
It was a job.
Because another thing, me and Evan talk about this all the time. Another thing that I'm starting to appreciate is seeing diverse jobs and careers and professions. It's okay. Because you always hear about doctors, lawyers, teachers, but you don't hear about something like a person is working with a government official to figure out what resources a community needs. Or even United Way, you hear about those, but even being a social worker within a bank, or even going to a group of people with your resume and saying, hey, look, I would like to work for you. Where can I fit in?
Yeah.
Because they will create positions around you. I've seen that happen.
That's how I got that job at the Atlanta Project.
Okay.
It was created by some folks. And because I knew, actually, when I was on maternity leave and I had Evan down here, my mom was watching him, I met with a lot of people because of my contacts in New York. And that's when I found out about this position. And so it was one that was created, and they wanted somebody in housing.
Okay.
And so that's where affordable housing. And so the key was, though, that it was only for 5 years. It was a project, okay? So I knew when I went to that job that it was only going to last for 5 years, and then I'd have to move on to something else.
Right.
The key was that while these communities were coming up with their plans and you're helping them, the key was for you to help them and then get out the way. Connect them to the resources, and then you don't need to be there.
Right.
And each community had a university partner, a corporate partner that they work with. So that was probably one of the most rewarding.
It sounds like it.
But difficult too, because part of what happened was, even though it was President Carter, and he actually had one of the communities himself. He and Mrs. Carter both were involved in one of the
That's good.
community teams. Oh yeah, they were involved.
That's good.
Well, the issue was lack of trust in those communities. They had been exposed to anti-poverty programs in the past, and people had decided what was best for them, as opposed to them having a say so. And so they did not just automatically trust people saying that they're going to help them.
I believe it, yeah.
Just because, even though it was President Carter.
Was this before or after the Olympics?
Before.
Okay.
This was 1992 to 90. I was there 92 to 96.
Okay.
Yeah.
Yeah, and then Clinton was next. Wait, no,
Yeah,
Bush.
and
Bush
came
for a
in.
quick second, and then Clinton.
Yeah.
Okay.
Yeah. So, yeah. So it was. I stayed there 4 years, and when I found out about a position the Office of the Comptroller of the Currency, and that's part of Treasury. And they were looking for CRA
Some you did in New York.
expertise. And so,
Now wait, how did you find jobs back then? Was it all word of mouth? Because it was no Indeed.com.
it was word of mouth.
Okay.
The network, as you call it, networking. And I have found that really was the best type of referral system for me. Because when I would meet people, when I was looking, I would say to people, I'm looking, so let me know if you hear of anything. And based on my relationship with them and what my performance, they didn't have a problem when something came up. So, so I did hear about the OCC, and that was I became a community reinvestment and development specialist, and they did a national search. They were looking all over the country for people to cover the Southeast region. And so it was competitive, but like I said, it's about knowing. I remember going to events where I knew, in one particular event where I knew there were OCC people there. And I didn't know them, but I decided to go introduce myself and told them that I was applying for the position. You know, and we ended up talking on the elevator in that quick elevator pitch. And the woman, it was a woman and a guy. The woman, I evidently appealed to her because she's the one that really pushed for me to get that position. And that was Carol Clem.
Okay.
We're friends to this day.
That's awesome.
Yeah, she did. So I did that from 96 2003. So, and part of it was, so I'm a regulator. I'm a bank regulator.
Okay.
Yeah.
I'm still waiting for the IRS and Freddie Mae or Freddie Mac.
I did that until your IRS was the Treasury as well.
Okay.
So, OCC was a sister to IRS, and we both were part of Treasury.
Oh, okay.
Yeah, so
okay.
You may have been, maybe because I told you I did taxes. I did that when I was at United Way.
Okay.
Yeah.
Now tell me this.
Job.
What did you learn? Were there any secrets that you learned? Because I'm pretty sure you met some people that were wealthy. So were there any secrets that they taught you about money other than the guy who you said that was telling you to
save? The other
save?
lesson that he taught me was when I told you I was trying to get this co-op. And I had saved money in the tax deferred account. And I was going to take it out to do it. And he says, don't do that, Nancy. Don't use your own money. You borrow money and you use that as collateral. So that's how, because he said if you got it and you got some credit and you can pay it back, borrow it as opposed to using the money that you have.
So why was that?
So you don't want to use your own money. If you can use other people's money, you've heard that before.
I have, but I'm not the one to tell that to.
Oh, okay.
You can't tell me that because I'm going to use yours, mine, everybody's.
Well, you got to be strategic. Always have to be strategic.
But even in business, I hear a lot of people say, if you can get the loan, especially if they'll give you zero APR until such and such, and then you can pay it back by then.
Right.
But I never understood that concept. That was something that was like another language to me.
Because especially if it's a retirement, money you save for retirement.
Oh, yeah, you definitely don't want to touch your retirement.
No.
Yeah.
You don't want to use your savings, but you want to use it for emergencies.
Okay.
Or use it as some kind of collateral later on.
Okay.
But you'll never be able to have the amount of money to be able to do something that you really want. I mean, you have to always finance things.
Okay.
But you have to know how to do it smartly.
Okay.
Yeah. You gotta borrow.
So when you pay back on money that you borrow or things that you finance, how do you tackle it? Are you aggressive? Do you just pay the minimal? Do you pay a little over the minimal? What do you do?
I never pay the minimum. Never. I always pay more.
Okay.
And my goal is to pay it off.
Okay.
That's the goal. And there are various ways that you tackle these various debts. From going from the one that's the highest amount or has the highest interest rate.
Mm-hmm.
Generally, that's the one you really want to pay off, that one with the highest interest rates. And you're going to only get the best interest rates if you have a good credit score. That's the importance of having a great credit score. You got to borrow most things anyway, but the question is how much are you paying for that money in terms of interest rates?
Right.
So if you have bad credit, they might give you something, but they're going to charge you for it big time.
Yep.
So it takes you forever to pay it off because you're paying so much interest.
Yep.
So, yeah, it works.
I actually borrowed, but probably still have, Dave Ramsey's book from Yaha. I can't remember the title of it, but I remember one of the things, I'm trying to look over here at the library, see if it's over there, but one of the things that he was saying was pay off the high interest rate things first. And I remember, I never knew this until college, because I was one of those people that got a credit card and was like, oh, I got money, and Christmas was good, birthdays was good, and then when it came time to pay it off, I was paying the minimum, and then that's when I read, you always pay more than a minimal, even if it's a few dollars over, just beginning with. When you get better with money, of course, you're going to get better with money, but in the starting out, do the best that you can. So just a few dollars above, and then I remember having a 29.9% APR on a credit card, and I didn't know, oh no, I have to pay them this amount of money plus or multiply that by 0.29 and whatever number that is what's going to be added to that debt.
Yep.
So that was something that got me too, like, oh no, these interest rates are ridiculous. Like predatory interest rates is a real thing.
We did deal with predatory lending when I was at the OCC. Part of my responsibility there was to work with nonprofits and small businesses as well as banks.
Okay.
So I would try to get the banks to invest in communities primarily through nonprofit agencies or small business loans. And so I did a lot of education around credit, around lending, and about CRA and how to approach lenders. So part of it was helping the nonprofits and small businesses understand what their responsibility was, which was to be disciplined and to comply with whatever it is the bank wanted them to do in terms, there is a structure there.
Yep.
You know, what we would do is push the banks to be flexible. But there still is a structure that you have to adhere to. Nobody's going to give you, a lot of nonprofits or small business, like, I come to get my CRA money. Well, no. Nobody's going to give you anything.
Yeah, especially if there's nothing in it for them.
Right. Banks are risk averse. And that's what we would tell them all the time. Banks try to, they charge interest based on the risk that they're taking. Mm-hmm. That's how they see it.
And that's why you say the lower the interest rate or the lower the credit score, the higher the interest rate. Yeah. Because you're not good with money. Right. Your score shows
they see it. How they going to get their money back?
Yep.
They're not. Banks are not in the business of giving away money.
Yeah.
So that's what I would say to people. If you want a grant, you go to a foundation. You go to the government for those sources. But a bank, you might get a small grant. You know, they have a budget where they'll give out grants. But it's not primarily what they do. That's one department. Corporate responsibility, community relations, whatever. But it's not where you're going to get the bulk of your funds if you're a nonprofit. First of all, only nonprofits get grants anyway. for the most
Okay.
part. For the
Okay.
most part.
Okay.
So that's how I was at the OCC. Well, they closed the Atlanta office in 2003, and only one of us could be there because Carol was there as well. And we were partners in the Southeast, handling the Southeast. But they said only one could be in the Southeast, and
So who ended up staying?
she did.
Okay.
She'd been there the longest.
That's when you got what, a payout or a settlement?
Yeah.
What was it called?
Yeah.
A package.
Yeah.
So what did you do with that money? Like, was it like, oh, I just got paid all of this money, or was it like, hey, no, let me save it? What was your strategy with that money?
Let me save.
Okay.
Let me save. Because although I think I paid some things off, I always got pleasure in paying off a bill. That would excite me. Like, I know I don't have to carry this monthly bill anymore. Pay it off.
Yeah. Yeah.
You know? So that way you can manage your expenses. If you know, based on your income, if you know you can get rid of a couple of bills a month, you got more disposable income.
Tell me this. What do you do? Because I'm trying to figure out a good rule of thumb for me. What do you do if you get extra money somewhere that you probably weren't expecting to get? So say, for instance, if a check just comes in the mail, hey, you paid too much last month on this bill, here's $500. Mm-hmm. Or income tax time, while you know you may get a refund, especially if you have kids, you know you're going to get it. But to me, sometimes I still count it as unexpected money or just additional money.
Well,
what do you do?
Most people pay, they buy that, they would buy stuff. And they have that money spent 2-3 times.
Oh, yeah. It's a trip.
2-3 times.
We going on vacation.
Yeah,
we flying first class,
Yeah,
popping bottles. That's like PPP loans and all those people that got all that money during COVID and ain't got nothing. When I tell you that, to me, that makes me so embarrassed for our culture, because it's a lot of people that got a lot of money and don't have nothing to show for it.
Well, unfortunately, a lot of it had to do was not funded properly or correctly. It was fraudulent. A lot of it was.
Talking about PPP, right?
Yeah.
But even the people who were getting unemployment money, $600, and then the additional money on top.
Yeah.
Because there was some people that was making way more unemployed than they ever made employed.
I do remember that.
And they was on trips and they were out.
That's what I mean about being smart about what you're going to do with the money. And going back to your long term and short term.
But real quick, if you were one of those people, though, because that's extra money they were getting, what should they have been doing with that extra money?
Paying off their loans, paying off their bills.
And then once you pay off debt, save.
There's that savings in so many cases gives you a sense of security that if something happens, I got this to fall back on. You know, nothing like an emergency fund.
Yeah.
You know, that's so like the car. Something happens with the air conditioner. Stuff happens.
Yes.
And so you gotta be prepared. You know, when it does.
Yep.
Yeah. So but so anyway, I left, and part of what you were talking about was like a bonus. That if you left, they would give you 6 months of your salary. And so I was hoping, even though I had a couple of options, I could have stayed with the OCC and went into this group of people, they called the resource cadre, of people who would be in Washington on special assignments.
Okay.
So it wasn't like they were dumping me. So I did get accepted into that group of people. But that meant I would have been having to travel to D.C. all the time, going on here, there.
Mr. Ernie would have loved that.
Yeah. But the job involved travel anyway.
Right.
It really did. But not that kind of travel. Every week going up to D.C. and staying there.
Now, would you have just moved to D.C. altogether where they had paid for relocation?
Yeah.
Okay.
But I didn't want to leave Atlanta.
Okay.
That was part of it.
Okay.
Because also I could have had that same job, the community investment job, in Denver or Cleveland.
Okay.
So I could have moved and taken the job there. but I didn't want to do that. But because of people that I knew, I put the word out that I was looking, and that's when I got the call from Freddie Mac. Well, someone I knew from the Atlanta Project, who actually had told me about the OCC job, and this is long. I probably shouldn't mention names, but he's the one that he and Cassandra, they own the Privy.
They names sound so familiar. Okay.
Yeah.
Stonecrest.
I met them at Freddie Mac.
Okay.
And so he wanted me to be on his team, and he worked it. Of course, I had to qualify. I had to
Right.
interview and all of that. And so I ended up working for him at Freddie Mac. Again, a lot of people don't know who Freddie Mac is, and who they were, or what they're still out there. They are a secondary market, and so so by secondary, their primary customers are banks. So what they do is they create products, mortgage products for the most part, that when the banks make the loans and they use these products, Freddie Mac takes them into its portfolio and changes them into securities, and put them out there in the stock market.
Were you there when Freddie Mac crashed, I guess? What was that happened? It was like
I
08?
was.
07, 08?
That's when I left.
Okay. What happened?
Well, there were all of these mortgages that were being created by banks for the most part, and they were predatory. A lot of them were predatory, but a lot of them were not necessarily traditional banks. They were mortgage companies,
Okay.
which are different from a lot of banks owned mortgage companies, but these were mortgage companies who were putting these mortgages out there
Okay.
and getting brokers in the community, particularly the black community, to get folks to buy these loans. And they would tell them to make these loans or to apply for these loans, and they would give them to them. And in a lot of cases, they were not. Some of them, although not many in our community, were no interest, not interest, no income. Was it Nina? No income, no assets.
Mm.
They did that in a lot of the communities that were folks who had money. You could get a loan, didn't have to put your
No income, no
down.
assets sound broke to me. No income, no.
It was
What do you
not-
have?
it
No
was
income, no
not-
assets. Like
You had a portfolio. These were rich people for the most part. That did
okay, I
that.
believe
So they
it.
had. Well, let me say it wasn't verified.
Okay,
Their documentation was not there. There was some that was stated income, stated assets, those of course sisters, where people just say, okay, this is my income, this is my assets. And that was all they went by. You know that process you go through with mortgage?
Mhm. And that's probably why they changed the process so much. So
Yeah, they went
you
to
can't
the other
do that
extreme.
now.
They went to the other extreme.
you cannot do that now.
So people were getting these loans. Some of them were adjustable, and they would tell them, okay, well, we can do this now, but in a couple of years, you can refinance, and you won't have this high interest rate anymore. That's what they were telling people.
Speaking of loans, I applied for the PPP loan right when I started for us. And I remember they were going to give me $10,000, but my APR to repay was like 45.99%. And I said, these folks are out of their minds if they think that I'm going to give them $15,000 back. Because essentially by the time I pay it back, that's how much it's going to be. Like that was absurd. They say the one lady who got killed during the insurrection, she had a PPP loan, and her interest rates to pay back was like 63.9. God rest her soul. I don't know if that's true or false, but that was definitely something that I've heard was that her interest rates were that. So they was like, why are you even down there? You should be on our side fighting these crazy interest rates and the money scams and what's going on.
Yeah. Well, at that time, and this is typical. There was hysteria because of COVID, and it's something that had never happened before, a pandemic.
Right.
And so people were trying to figure out, the government, how they can help people through this process. Um, and of course, Trump and his people, they came up, well, at least his experts came up with the
PPP loans.
no the virus,
Oh, the vaccine.
the
Okay.
vaccine. Now there was a question about how to get it out there. That's what Biden did. But in terms of the PPP loans, in terms of the unemployment, in terms of increased SNAP benefits, that was the Congress. Nancy Pelosi, for the most part, led that effort to get money in people's hands. And it's so funny that people have very short memories. But she actually got it through program. Now the PPP, what happens is that Congress passes legislation for this stuff to happen, and then the administration has to come up with rules and ways to come up with to make it happen, to implement it. Well, that didn't happen with Trump. That's why so many people got away with these loans or got the wrong message. And there was a lot of fraud afterwards. Because believe me, afterwards they were going after people who got those loans and shouldn't have gotten them.
Yep.
People lied big time to get those loans.
Yep.
Yeah. But
I remember somebody was telling me they had they could make check stubs, and I'm like, of all the things in the world that you picked up during COVID, you learned, oh, y'all scamming for real. I remember seeing people can press cards in the house, in an abandoned house in the projects. You got a card presser, pressing credit cards and selling them to people.
People did all kind of stuff. When you hear free money, when people hear that, they go crazy and they do all kind of things, all kind of scams to get it.
Yep.
And that's what happened.
Yep. And I was like, be my luck. I'm gonna be one of the people get caught up. And I ain't nope.
I don't mess with the government. You may think you getting away with it, and at the time you really are.
Yep.
But they coming for you.
Yep.
Believe me, they come back.
Yep.
Even those folks, even with IRS and so it was so I was at Freddie Mac when the crash happened. And so
that was another package.
No, it was not. It was a package later. But I went for a year while this was happening. Freddie Mac they were buying mortgages from the banks, right? But the banks were servicing the loans, right? Where you get your monthly statement. They would come, banks had servicing offices where they were servicing these loans that Freddie Mac had bought. Right? So the piles of applications, the people foreclosures were piling up in these servicing offices of all these people who were not able to pay back their loans. So they sent half of Freddie Mac's team into these servicing shops to try to move some of that stuff. I went to actually Chase. It started out as Washington Mutual, but Chase ended up buying them. And so I was there working with the Chase folks, trying to figure out a way to either help people to try to forgive some of these loans or to modify. Lots of modifications of loans to help people be able to afford them, redo them, refinance them. That was probably one of the most trying experiences I had because I was in Jacksonville, Florida. So every week I went to Jacksonville, Florida.
That was when we were in college.
Yeah. I went to Jacksonville, Florida to this servicing shop and work with those folks to try to get through all of those loans. And so I did it for a year. And of course, my ex during that time had a near fatal accident. I had almost been there a year. So I took a leave when he had the accident. And so right after that, when I was going to come back, they decided that um, the unit at Freddie Mac that had been paying for us to do this decided they weren't going to pay anymore. So we could work for this unit, um, non-performing loans unit, and do the same thing. Um, and I did not want to do that.
Okay.
I did not.
I did not know you were in Jacksonville before the accident. I thought that was college. That's why I said when we were in college, but that was high school.
That was it was high school, 2008.
I didn't know you were going to Jacksonville
2009.
then. Oh, okay.
I went to Tampa when I went back to the OCC. That's what
Okay.
you're thinking of. Yeah.
So why travel for that one but not anywhere else? Because you travel every week. At least the job when we were in college. You traveled every week.
Yeah, because I was home. I could still come back home.
Okay.
The other one I had to move.
Okay.
So I could still come back home, and I did every weekend.
Okay. Yeah, I remember Evan said it because I was like, what kind of job is your mama doing where she ain't in the house? I was like, she got a whole other life going on down there. Y'all don't even know. Y'all know, my mom was always somewhere else. Like, what is your mama doing? I gotta be her. I here in Florida living. But I would love to, because I'm working on getting licensed in Jersey and Georgia. So I would, in my dream to meet or find some really wealthy clients that need a therapist in Jersey. They can fly me to Jersey to come and see them to do their sessions and come right on back. Like that's listen,
your dream,
listen, that's the dream. At least one of them. The podcast, of course, is a dream too, but because I miss up there. It's nothing like the hustle and bustle of New York, Jersey. Like everybody understands what the goal is, and it's to make money, and if we're not making money, then what are we doing? and if you too slow getting to it, it's like you in the way, stop. So people always give them the salt, like, oh, they're so aggressive, but it's like, no, they're motivated, they have somewhere to go, they have something to do. So even working up there was a lot different. Like I remember being up at 8:00 in the morning and everybody was like up, moving, going, and I'm like, oh no, in Georgia, we slugging. You never really knew if people cared about their job for real or not in Jersey, because it was understood, or at least New York too. It was understood that this is what I got to do to provide, and I'm going to go get some money.
You got to work harder up there too.
Yep.
Because things are more expensive.
Yeah. Yeah, especially now.
Yes, they are.
It is crazy now. It is crazy now. So what would you say, because I think are very fortunate to where we can work jobs that we are passionate about working. What would you say to maybe a mom who's working a dead end job, or maybe didn't go to college, or just how to get into doing something for money that at least gives her some sort of pleasure or fulfillment, like where to look or where to go? I know you mentioned networking. Networking is definitely huge, because a lot of times it's not what you know, as we know, it's who you know. And even qualifications, sometimes they'll work with you. They'll take you unqualified and qualify you, help you get whatever credentials you need.
I would say is, number one, know what you have a passion for. I mean, have some sense of where you're going. I mean, everybody dreams about something, and whether or not, so they say the key to, I guess, a good career is just doing something that you feel like is not work, but loving to do it.
Yeah.
Now that's a luxury too.
Yeah,
for most
yeah,
people.
yeah.
That's a luxury. But so just have some sense of your passion and what it is you like to do, and then it's going to take not only discipline, but it's going to take your having to do something. You have to acquire skills. I mean, that's the bottom line. You got to have some skills to do what it is you want to do.
Yeah.
If you're in a dead-end job, then you need to figure out how you can get some other skills I firmly believe in training, and exposure and reading. And, you have to always do something with yourself. I firmly believe that you never stop learning. Even now, I never think I know everything, but I always have a thirst for learning. I don't care how old I am. It's like you never stop learning. That life is always, to me, it's a work in progress.
Yeah.
So you can always improve yourself. And to me, I have an annual exercise about, okay, of course, I have certain goals I want to reach. Um, but also, what am I going to do to improve myself this year? What can I do? So it's always, I guess you got to have a good sense of who you are and have a good self-esteem to knowing that you can do basically what you want to do, and that you can find the resources to make it happen.
Yep.
But you got to be dogged. You got to be strategic. You got to be disciplined. A lot of people don't have that discipline and they give up, especially as a single mom. I could see that.
Yeah.
But if you think about your children, and what you want for them, it's about not just knowing yourself, being financially literate, and teach your children as well.
Yeah. Yeah.
You want a better world for them. And I always believe that you want them to have a better life than you did.
Yep.
And I think you want to leave a legacy, and you want to leave them something. Because I know my mom really didn't have a whole lot to leave us. So, and I know that if you don't want your child to be bogged down with student loans, sometimes you can't, if you don't have anything yourself, but if there's something that you could do, even like those, the 529 plans, those plans for children, just put a little bit away, some kind of savings for them. It'll help.
I'm glad you already started. At the end of every show, I give resources and advice for moms. Mm-hmm. So I think we both have a list, so we could just trade off our list. Okay. So I'm glad you started where you started. For me, I definitely want to say CDs, certificate of deposits. Mm-hmm. I'm starting to see those a lot more. And this is for people who starting out small. I saved up a month of expenses. I just had a monthly saving or a savings for a month of expenses, and I took that money and I put it in a CD for 19 months. So I'm steadily watching it. I put it in. It was one number. So far, it's grown $300. Mm-hmm. And I'm like, this was 2 months ago. So I'm like you say, when you watch the money grow, while I know I still have debt and everything on the side that I'm still working on, it's good to see, one, this is savings that I can't touch. And if I do touch, I'm going to be taxed and penalized so heavily that I don't even want to touch it at all. So moms, if you have a savings, a good amount of savings that you can put to the side for a good amount of time. I know there are banks. I'm with USAA, so they do it too. That's who I did my CD with. But Chase, I bank with Chase. Chase has a 9-month CD for 4.95%. Mm-hmm. So whatever amount you put in there, they're going to give you 4.9% each month on top of that. Is that how it works? Is it each month or is it total?
Well, I guess it grows each month, but by the end, you would have at least 4.9% of that amount.
Okay. In addition to, I thought so. Yeah. All right.
But CDs, this is probably one of the best times because interest rates are high.
Okay.
They have not. So you want high interest rates for deposits, for money that you're saving. You don't want high interest rates for money that you're borrowing.
Right.
So for a long time, the interest rates on CDs was very low. When interest rates were low, for borrowing, getting those mortgages, of course now they've gone up, the interest rates were low for savings. So now they're high. So if you're going to do it, this is probably the best time because the Federal Reserve Bank, which regulates those interest rates, they're going to lower them sometime this year, once or twice. I think the board meets quarterly, if I'm not mistaken, and they set the rates
Okay.
that are going to be out there. So they're going to be lower this year. So this is probably the best time. And they're going to lower them. They also control inflation. They're trying to control by monitoring and adjusting interest rates. They control inflation. So that is it's a good idea for now. But always follow interest rates.
How can people follow interest rates?
Well, I guess it depends on what you want to watch. Well, you could, the Federal Reserve Board, well, that might be a little technical for some people, but
Like, is there a website they can go on, or maybe a social media account you think somebody that'll talk about it?
that I'm probably not aware of. I don't know all the sites now. But even the Fed, just follow the Federal Reserve Board, and they'll probably have a place where they'll tell you. You always gonna know what the interest rate is, but that's their rate. It gets complicated because banks, that's what they call the prime rate, because banks charge another point over that to set their rates.
Okay.
Yeah, it's a process.
And when you're talking interest rates, are we talking money, savings, debt, houses? We talking everything.
Everything.
Okay.
Everything.
Okay.
But also in terms of the credit score, it not only impacts those interest rates, it also impacts your ability to get an apartment. Okay? Because they check your credit for almost anything now. So it's just good to have a decent score.
And to know your score. Where do you go to
know
check
it.
your credit score?
Everybody can go to annualcreditreport.com. And
Okay.
you get a free, well, actually, that's a credit report you get every year. You have to pay a little more if you get the score.
Okay.
But it's critical to know what your report says so that you can improve whatever. And they'll tell you what your issues are.
Yeah.
They will tell
Yeah.
you.
Yeah.
And you work on those issues, and that will always improve your credit score. Now, a lot of banks give you your credit score.
Your checking accounts and stuff. I use Experian.
Yeah.
And they're good about showing me what points went up and where points decreased and why it is what it is. Maybe because this account has been open this long, but this one I guess what is it? I owe so much on it and not making enough payments to really get the debt out of there. Yeah. So yeah, I love what you said too about getting out of debt. Get out of debt, stay out of debt. That's crucial. Once again, especially for our community. If there's anything that I want, I would love for us to be debt free, and I would love for us to get reparations.
Yeah.
To help us with some of this debt, even if it's a housing credit or cash money. But I just wish that somehow, some way, because it's sad to say, but I think of it as a way for the government and maybe even the top 1% who owns a lot of these companies and businesses for services and goods. A lot of black folks gonna go and spend that money. You're gonna get it right back. The reparations is really gonna go to the top. It's gonna funnel right onto them.
That is my issue about reparations and getting a cash settlement.
Yeah.
I think because like you said, it's not going to teach anybody anything about managing money. But I think if you could do it to pay off student loans, to help people get houses, to help people build wealth, that's what I think it should be used for.
And that's why I don't think we have it yet. And I think that's why there isn't a good set in stone plan, because I think there is enough of us who are now talking about money and getting smart about money and starting to see things that was always out there about saving and investing. What happens if you get your reparations and you go and invest it?
Yeah.
or you get your reparations and you go and buy a plot of land and build something on it, and now you're getting rent.
Yeah.
And making this money, because it's a lot of us who are knowledgeable about money that's starting to have conversations about it. So even during COVID, I was seeing like things about PPP, but I also was hearing more Black affluent people starting to speak about, hey, no, this is what you need to do with your money. Honestly, who really got the secrets, and I need to start rubbing elbows too. Jewish people got the secrets.
That's who it was that taught me in the beginning.
Yep. One of my coworkers was saying it was a Jewish lady that taught her how to buy a car and not pay as much as she paid. And she said, I'm telling you right now, it's not the time to buy a car. Don't buy a car. And I went on out and bought that old expensive stale car instead of listening to her and the Jewish lady advice. But
you gotta listen.
You gotta listen. You gotta listen, and you're gonna be broke, crying about what you ain't got.
Yeah, right. When people don't listen, they want what they want right then and there, and do not delay gratification. That is one of the things we do not do. Delay gratification. We got to have it right now. We want it now.
The way life is set up now, though, even down to TV, I don't go in a room and just flick through guide and look to see what's on TV. I pick what I want to watch. And I may pay $4 because I want to watch it right here, right now. Or there it is, right there, ready for me. Music. You don't flick through the radio station and wait to hear what they playing for you. You go and listen to what you want to listen to. Food. It's almost designed that you get what you want when you want it. Yeah. Sometimes you're going to pay the price for it. And sometimes it's just going to come.
That's true. And you have to pay for services. Nothing is free. And one of my biggest pet peeves, and as small as it is that I refuse to have to pay an ATM fee to get my money.
Oh, yeah.
I have the biggest pet peeve about that.
Yeah.
So I'm not going to pay you a fee to get my own money.
Yep.
So I learned ways. You go to one of the stores and get cash back. You go to the bank. Also, in terms of financial institutions, credit unions, if you can't get a decent bank relationship, then do a credit union. A lot of them are nonprofits, so they don't have the same fees that traditional banks have.
One of my coworker friends actually gets her check 2 days before we do because she's with the teachers credit union or whatever DeKalb County has.
You should join a credit. I encourage people to join credit unions. I did for the longest until they started closing branches and they were not accessible to me. So even though I still could go to like a Walmart and get cash back, in terms of having to change, they messed up my debit card a couple times, and I had to go to the office. Now this is a credit union out of Florida too, so.
Oh yeah, it was real inconvenient.
Yeah, it was not convenient for me.
I remember my mom had the Delta credit union, so we had to go all the way to the airport. I remember to get money, so that was inconvenient as well.
Very inconvenient.
Now back to the withdrawal fees. I know Chase does. If I get money, whatever ATM machine, I'm going to pay them, and then Chase will also take the money out as well. Yes. So I'm like you. No, I can't get cash. I can't do it. Somebody else going to have to be the one that can't beat me with this card. And also too, if I'm out of the country, they also charge me
fees for
international fees. Yep.
When I worked at the bank from my initial time going there from 86 to 92, I remember there were lots and lots and lots of banks, and they said at the time that there were going to be either mega banks, a few mega banks, and smaller institutions, and I was like, really? I've seen it happen over time. How banks bought each other, and became these mega banks, and also that. Banks generally get their revenue from the interest rate that they charge for you to borrow the money. So that, what is it? What percent now? That 29, even though that's not a bank, that's a
That's American Express.
Yeah, that's a finance company. Banks might charge you 16. That 16% is their revenue. That's what they make money on loans, not deposits.
Yep.
And so yeah, the banks are they started making most of their money from fees. That changed over the years. It used to be that they made it from the interest rates. They changed it to the fees because they began to charge for everything, from insufficient funds to the checks that what do you call them? The bounce checks.
Okay.
Transfer
fees. Yep.
ATM fees.
Yep.
The fees started making most of their revenue came from fees, and it still does.
Isn't Biden trying to regulate that? It's either Biden or
jump
Trump.
Fees.
Somebody was doing
something.
Biden
is trying to do something about the fees that you have to pay.
Okay.
For those entertainment ticket, you got all these extra. By the time you get the ticket to an event, you pay twice the amount that the ticket was.
And that's why I don't do Airbnb and Turbo and all of not Turbo, Turo. Is it Turo, Turbo? Verbo. I can't do all of them because when I'm looking at the cleaning fees and all of these different things that you end up paying, I don't even know if you clean for real, but I gotta pay you an extra $100 for that.
Oh, really?
I'm gonna go to the hotel.
Yeah. Oh, I thought you were. There are a lot of people who are the Airbnb people. Lots of people who wouldn't do anything else.
Yeah, no. And for me, I'm a complainer. So what my aunt taught me this, a good rule of thumb for her, she was like, I can't go to any little low class mom and pop or anything like that when it comes to something where I'm going and staying and spending a good amount of money, because what if something goes wrong and I need my money back? I'm not trying to be in court. I'm not trying to be on the phone with the bank going back and forth with you. I know with the Hyatt or the Hilton or the Sheraton or Delta or Port, Hertz, Alabama, I know I can get them on the phone and say, hey, this is what happened, Not only that, I'm a frequent customer, so you know, where's the perks that goes on top of this inconvenience? That's huge too. Moms, if you're ever spending your money too and you feel like you got a disservice or you didn't get what, say for instance because I've done this before, you spend a lot of money and you order something, maybe it was $2,000 and it didn't look the way that it was described, or you go on a trip or a vacation and they told you it was going to be one way but it wasn't the other. You gather your documents, you gather your proof. Of course you try to dispute it with them first, but you can dispute with the bank. I didn't know that you could do that. I didn't know that you can go directly to the bank, because I remember one time paying for something and I just never got it. So I'm just like, dang, they just took my money, and when I tried to reach out, that person wasn't there. So you can always speak to somebody and say, hey, look, so I bought this thing that I saw on Instagram and it didn't come, or it doesn't look like what it said it was supposed to look like. Dispute it. Now, does the dispute work 100% of the time? Nah. But at least you can try and get your money back that way. Now, if you're disputing things that shouldn't be disputed, that's fraud.
Yeah.
And you're going to get in
trouble. Or if you're disputing all the time, you dispute everything.
Yep.
You might look suspicious.
Yeah. So just be careful out there. Definitely be careful. What's one I guess, final takeaway for you, or big piece of advice for the moms? Let me see what I got too.
I'd say in order for you to be financially healthy, you need to be physically healthy. Take care of yourself. Try to live a healthy lifestyle. You have some control over that. You know, everybody likes, have their sweets or whatever, but the older you get, the harder it becomes. So if you can take care of yourself and your children, try to eat as healthy as possible and move, physically move. And I would say exercise, but that may be not a good word for some people, but physically move. That in itself gives you a certain amount of energy. So that is critical, because no matter how you financially get yourself together, if you're sick, that sickness or illness could take every dime you saved.
You ain't lying.
Every dime. So sometimes you can't help it, and there are resources out there, I guess, for people who don't have. Thank God we have Obamacare, that people can at least get some kind of insurance.
Yeah.
Because that healthcare is expensive.
Yeah, it is.
Very expensive.
Yeah, it is. I just have preventive care. That's it.
Yeah.
It's too expensive for anything else, and I'm not going to the doctor like that. I'm going to take care of myself.
Yeah. That's important. That is important. But and also, if just get financially literate. Just it doesn't take a whole lot. There's lots of information out there, and I guess sometimes you feel overwhelmed. You can feel overwhelmed, but if you focus on, there could be a brighter day. That long term, things won't always be this way. I used to always say that I've had difficult days. This too will pass.
Mm-hmm.
You're not gonna stay like that always,
Mm-hmm.
and you can work yourself out of a situation, because there's always some kind of resource out there, and that people will help you. If you want to help yourself, they're not gonna do it for you, and nothing is guaranteed. There's no free lunch.
Yep.
Nothing is free, so you have to work at it and earn what you get.
Yep. There's so 2 tidbits for me. There's I want to say Get Smart with Money is the name of the show on Netflix, where the guy is taking 4 random people. One is a athlete. He's teaching him how to invest in the S&P and steadily put money into the S&P. That's stocks, for those who don't know. Another one is a lady that's like $12,000 in debt, and he's teaching her how to save while paying off debt at the same time with her kids and everything.
Mm-hmm.
And it is hard for her. She definitely is emotional sometimes, and a lot of people can relate to that. Another one is a girl that was working minimum wage at a restaurant, living off tips pretty much, no health care. And he helped her use her talents to make extra money.
Mm-hmm.
And she was able to get health care, save some money, get a better job. So it's definitely something to check out. It's on Netflix if you have a Netflix account. Definitely Google, YouTube. It's a lot of resources out there. Social media doesn't always have to be for negativity. It can be a learning device as well. So it's nothing to search these things and for it to come up. But my takeaway is the kids are watching us. Not only are they listening to us and repeating what we say, but they're watching us and repeating what we do. So if you're always buying outfits for this and buying outfits for that, your children are going to buy mindlessly. If you're spending money on going out to eat and you're not cooking, guess what? They're going to do the same thing when they get older, and that's going to affect their health as well, because a lot of times when we go out to eat, we're not eating quality, nourishing meals. We're eating garbage, so that's going to mess us up too, and also put us more in debt.
And the biggies are the hair and the nails. The money that we spend. Can you imagine a savings account with that money?
I started doing press-ons. I didn't press them on before this, but my nails, they fall off so quickly.
Because it's not good for you to have those nails like that anyway.
It's not.
It's
not. And it's expensive.
It's
I think the last time I checked, a full set was like $60. And we talking every other week or once a month. Right, that's no design.
Right.
I know, I see women pay $100-something for those designs and all of that stuff.
I've seen it too.
$7 press on, please. Thank you. And then I can take them off when I need to take them off and keep on moving. And that's only temporarily.
So that's why your children are always pulling on my nails.
They not used to nails.
Coming off.
They not used to nails.
Especially when you pull them off.
But I was weird like that about fingernails. And I don't know if you noticed, she bites hers.
Okay.
Yep. Yeah. So she bites hers. So I think she's gonna have like a nervous thing. Me too. I still bite mine. Yeah, big boy. I don't. His are steadily growing, but Evan, I know this clips his too, but. Every little thing adds up. So
yes,
even if you can,
those are not little things.
Even if you can deny them, like you can make it a contest or a game, especially if you have the older kids. Hey kids, let's look at our monthly expenses and let's see how we can cut back. And whatever ways we cut back, let's split that money. So for example, the water bill is $500 this month. If we can get it down to $300, we can share that $200. Make it a fun game and watch the showers get shorter, or watch, for example, entertainment shows, or hey, let's look at these subscriptions that we have. What subscriptions can we do without?
Yeah.
What's something free that you can start watching? Yeah. Tubi is free, and almost everything is on Tubi. I would not be paying for streaming sites unless I absolutely wanted to, but you don't have to.
Yeah.
There are things out there that is free. Of course, you're going to need the TV for it, but start looking for other ways. Deny or delay instant gratification. And these kids are going to have you thinking that they need the latest and the greatest because we have lived a life where we thought we needed the latest and the greatest. So if we can deny ourselves first and show kids how to do it the mature way, I think they'll learn those habits from us, and they'll go on to be even greater than we are with money, because I think giving a better life doesn't necessarily mean luxury and spending.
Right.
A better life can be quality, fulfilling, and satisfactory without having.
Yeah. Having all of that stuff.
Yep.
Because in the end, you can't take it with you. I mean, you hear people say that, and they want to enjoy it while they're here. And to some extent, I understand that, but you have to understand that there are more, you really have to focus on what the future holds, particularly for your children. You know, that money when you buying all that stuff could be something that they need in the future. You know, suppose they want to start a business. I guess the first thing people think is school. College, or even technical training. Well, they need money to do it.
Yeah.
And that money you're spending needlessly or wasting could be used for that.
Yep.
You know?
And they can get scholarships.
Yeah.
Push them to get good grades.
Right.
Most states have in-state.
Yeah.
If they stay in-state tuition, where you don't have to give them the best by spending the most.
Yeah.
You don't. Quality is great. I love quality, and sometimes luxury is everything, but guess what?
Once in a while.
Having something to pass on. And something we didn't really touch on, life insurance.
Yes.
You need to have a life insurance policy at the bare minimum to at least take care of the debt that you have.
Exactly.
Because the worst thing you can do is leave your family with debt that they have to find and figure out what to do with after you're gone. My family is in a small town, and I get it. A lot of people we don't have it. I look like I got it, but I don't even have it. But I got $250,000 for my kids and my husband should something happen. The same thing for them. I think Evan said his policy is $1 million, but the time that you pass is not the time for us to fuss and fight over who gets what. And mad about crumbs. One of my cousins, she was real upset when her dad passed away because she was saying like he didn't leave her anything. But it's unfortunate too. Yeah, you wanted something, but you probably were going to squander it anyways. And that's where the wills come in. You got to have a will also.
Yes,
get somebody. I wouldn't even do a family member. Get a power of attorney. Get somebody. ATN said her best friend is her power of attorney. Great, because I don't want to be the one that has to say, hey, mom, so you're actually not going to get what you thought ATN was going to give you. I don't want to be the bearer of bad news at a time like that. Grieving is not the time to find out what you're getting or what you're not getting. They say sometimes that's what splits the family up, is when somebody passes away and you have to either take on somebody's debt or be the one that figures out or figure out how we're going to split up whatever they do have.
Yeah. Well, that brings out the worst in people. And you like to think that, oh no, we're a good family. We relate well. It never fails. I don't care how close you think you are. It never fails.
Yep.
That there is always some issue And it goes back to childhood when they think the mother liked this one better than they like them, or the mother favored that one or didn't like that one, and so, or whatever the person, that the deceased person, but just have it in writing.
Yeah.
And let people know.
Yeah.
That you have a will, and where stuff is.
Yeah, that's huge.
Yeah.
Because I said, Evan, you brag a lot about all of the different knickknacks that you pay around the way, but God forbid something happened to you, I don't know what's out there that I'm gonna have to send death certificates to.
Yeah.
And it's sad, and we need to talk more about it. And I don't know if it's a Black community thing or if it's just humans. But we all know we're gonna die, but yet and still, that's the one thing we don't prepare for.
Yeah. Well, and it's more difficult when you're younger because you think you got a lot of time.
Yeah.
As you get older and you see people around you leaving you, you understand it could be me next.
Yep.
And so you really begin to think about it then and focus on it because it's important.
Yep.
You say you don't want to leave a burden for your children and grandchildren,
Oh. Somebody had to cut that part out.
Yeah.
Well,
whoopsies. It did wait until the end almost. Huh?
Yeah, I'll just pick that up. Don't mind the mess. I'll have to crop it, but final takeaway for sure is I'm gonna cut that too.
You had a pretty good takeaway.
All right.
It must be kind of heavy.
Do my hand. Okay. Yeah, I kind of had a feeling that was gonna happen. I'm gonna figure that one out for the next one. Okay. So last and final takeaway for sure is they always say you want to live like it's your last day, but let's live financially like it's our last day as well. So make sure your affairs are in order. Make sure you're writing stuff down. Get out of debt. Stay out of debt. Save some money. Leave the next generation with something. If you were left with nothing, do not leave your children with nothing. Leave them with something. Even if it's no debt at all, that's better than a bunch of debt, a bunch of bills, a bunch of things out of nowhere. And if you have student loans that are public loans, they go away when you die. Just make sure you verify that. And if you have private loans, they do not go away when you die. So get your affairs in order. Like Ms. Nancy said, get your health in order. Get your wealth in order, because we can do it.
Yeah.
And Congress, we need our reparations. And I'm so serious. Laughing but serious, we need reparations.
Well, let me say this. That goes with all the rest that you said. It is up to you all, in particular young people, to get involved in your community and know what's going on and become politically astute. Okay? Because you need to know who your representatives are and who has the same kinds of values that you have. So that is really important, because you can't complain about stuff happening around you if you haven't tried to do anything about it.
That's true.
So I remember we learned in college, going to HBCU, Spelman, that you have an obligation to your community. And so the question is, what kind of contribution do you make to the community you live in, and even your local community and even the country? It's about what you can do, and helping to organize and galvanize others. It's so important. And voting, vote. Okay?
And not just the presidential election, every election.
Yes.
If not for you, do it for your ancestors who could not
That's
do
right.
it.
Absolutely.
Who died so you could do it.
Absolutely.
That one I agree with you on vote.
Yeah.
We're not telling you to vote for it, but vote.
Oh, I'll tell you.
Each and every election. Give me a simple
sample ballot. I'll circulate for you.
Yeah.
And that's another thing too. Do your research. They
Yeah.
they have sample ballots.
Research.
Look at the sample ballot and see who's running.
Yes.
Simple as that. But thank you so much, Miss Nancy. I really appreciate you coming on and bestowing your wisdom upon the mothers out there.
Okay.
You
My
take
pleasure.
I appreciate it. You take care.
Okay, you too.
All right. Bye-bye.
Bye.